Chapter 20, Electronic Filing. The following forms and publications were used in the research and development of this lesson. Forms and publications are available at www.irs.gov. The objectives for this lesson are for the student to comprehend the different kinds of e-filing options, whether it is through a third-party bank or directly through the IRS. The student will understand how e-filing works, the process the return goes through being e-filed, and what forms to use if the taxpayer does not want to e-file, or as we call it, opt out. E-filing is the means by which a tax return is submitted electronically to the IRS. In the past, of course, people would choose to mail it in. In this case, no forms to mail, unless there is a balance due. It provides for a more secure way of sending your tax return information to the IRS, as well as it makes it more secure. It can't be lost. No one else, if it goes through the mail and gets lost, then there's the issue of someone finding it and having all your personal information. So this provides a more secure method by which the IRS receives your tax return, and of course a more secure way of getting you and a faster way to get the refunds. But must mail your payment, even if if your tax return is filed electronically, any balance due must be mailed by April 15th. An ERO is the authorized IRS e-file provider that originates the electronic submission of a return to the IRS. The ERO is usually the first point of contact for a taxpayer to file their tax return. So there's on one hand, filing a return, to create the tax return, to input all the income and deductions and payments to arrive at the least amount of tax due, which should balance and give you the maximum amount of refund possible, legally possible. But once a tax return is completed, how does that then get to the IRS? And the best and most secure way now, and the IRS is really requiring all of us to electronically file it, part of the Federal Paper Reduction Act. So although an individual can engage in tax return preparation, the activity of submitting the returns to the IRS as an ERO is separate and a different function. An ERO originates the electronic submission by either of the following: electronically sending the return to a transmitter that will transmit the return to the IRS, directly transmitting the return to the IRS, or providing a return to an intermediate service provider for processing prior to transmission to the IRS. Now, to safeguard IRS e-file from fraud and abuse, an ERO should confirm identities and tax identification numbers of taxpayers, spouses, and dependents listed on returns prepared by its firm. That is why in our firm it is a requirement to, especially with new clients, to verify their ID. TINs, of course, include Social Security numbers, employer identification numbers, adopted taxpayer identification numbers, and individual taxpayer identification numbers. To confirm identities, an ERO should ask taxpayers not known to them to provide two forms of identification. Picture IDs are certainly preferable, and they must include the taxpayer's name and current address. Also seen, the Social Security card or ITIN letters and other documents avoids including incorrect TINs for taxpayers, spouses, and dependents on returns, as well as verifying the name. Providers should take care to ensure that they transcribe all TINs correctly. Sometimes we run into a challenge with names and not knowing whether a name is a middle name or part of the last name. So very important to be able to cross-check a Social Security card to verify the correct name, because that's what it matches, is against the Social Security records. Now, what is fraud? Fraud is a deliberately practiced deception in order to secure unfair or unlawful gain. I had a client come to me wanting me to create an imaginary business to reduce his taxable income. And he wanted me to do it. It wasn't even an issue of he was trying to get me to go along with his business that he created, that he imagined in his head. No, he wanted me to create the business so that then he would not have to pay taxes. Very amazing what people think that we will do as tax preparers. I am proud to work for a company that would not ever expect anyone to do such a thing. And in my example, I certainly told the gentleman, there's the door and please don't return. Tax preparers have an obligation to prepare tax returns as honestly and accurately as possible. My official opinion and my objective is to help my client. I don't work for the IRS, and I tell the client that. My objective is to help the client pay the least amount of tax legally possible. But I also have an obligation to tax law and to do that correctly as well. So if a preparer has reason to believe the information given to them to prepare a taxpayer's return is fraudulent, well, the tax preparer should either research the situation through questioning the taxpayer or refuse to complete the return. I also had a client, I even knew him, was wanting to do a tax return and including his 3 nephews as his dependents. When asked, do they live with him? He said, yes, they do, and they lived with me all year. But I had been at his home, and I had been at his home several times throughout the year, and I never remember seeing those nephews at his home. I never remember seeing a bedroom with 3 beds for little boys. There was nothing to indicate to me, knowing him as I do, that there actually were. As I mentioned it to him, then he brought up, well, I just want to use them. My sister's not using them. So he was attempting to get me to fraud. But I knew better, and of course I could not do that, and also asked him to leave. The preparer also has an obligation to alert the IRS concerning fraudulent returns. If the preparer feels a fraudulent return has been filed by a taxpayer or another tax preparer, they should contact the Criminal Investigation Division of the IRS. Following is a list of suspicious activities and warning signs of fraud. The preparer should notify the IRS if they suspect fraud. And you will get and you can see on our website and through the book a list of fraudulent activity. One interesting line that used to be an issue to suspect fraud was if the fathers of children did not know the date of birth of their children. Now, I found that personally humorous because, in my experience, most fathers do not know the date of birth of their children. The mothers do. If the mothers don't, that certainly might be a suspicion for fraud. But most cases, the fathers don't know the date of birth of their children. That's not, to me, an issue, sign of fraud. Another issue to deal with at the end of the tax return is assigning PINs. Obviously, a tax return that is transmitted electronically cannot have a manual signature. So what happens, there is a 5-digit identification PIN for both the taxpayer and the preparer to enter into the return. And this is used to sign the return electronically. So a form stays with us saying, I have identified this PIN, and by my signature, that becomes my electronic signature. And a 5-digit PIN is assigned. Then we keep that on file with us here, and then of course the electronic PIN is transmitted along with the return to the IRS. It can be a self-select PIN or a practitioner PIN. Now, of course, technology is advancing enough that we actually have a type of little scanner. I've seen these also at the pharmacies where you can sign and that signature gets scanned in and becomes an actual electronic signature, and that works fine too. Record keeping and documentation requirements. EROs must retain the following material until the end of the calendar year at the business address from which it originated the return, or at a location that allows the ERO to readily access the material, as it must be available at the time of IRS request. An ERO may retain the required records at the business address of the responsible official or at a location that allows the responsible official to readily access the material during any period of time the office is closed, as it must be available at the time of IRS request through the end of the calendar year. So there are limitations. More than 3 years, generally at least 3 years, must retain the records for the IRS to see as well. Now, what is not eligible for e-file? Non-current year returns. And we get those. I'll have a client come in and sit down. The most extreme one was a lady that came in and said, well, I haven't done my taxes for 5 years. And she had all the W-2s. And so I explained to her our fees based on her information for the long form, what our fees would be for each one. And as I did the first one, which I always start with the latest one, how am I putting it? The earliest one. So if it's from 2005 through 2010, I start with 2005 is what I'm trying to say. And I did the 2005, and as I completed the tax return, she was actually getting a refund of $2,500. So I explained to her how probably she would not get that because there is a statute of limitations of 3 years in getting refunds. So I offered her the opportunity to not even file that one and save herself the filing fees that I would charge her, and she chose to go ahead and get it done anyway. So we did 5 years worth of tax returns, and of course 2005 through 2009 we couldn't send electronically. They had to be mailed in. Only the current one on that year, 2010, were we electronically filing. And she had no problem. I find it humorous. She has not been back yet, so I'm assuming she's waiting another 5 years before filing again. But I encouraged her to do it every year, but she should get the 3 years, or at least 3 years, of refunds, and the IRS will pay some interest. Fiscal year returns, if you don't go on a calendar year, that cannot be e-filed. Amended returns must be mailed. And returns with rare or unusual processing conditions. Now, processing return information from taxpayers. An ERO originates the electronic submission of the return it either prepares or collects from the taxpayer wishing to have their return e-filed. The ERO must always identify the paid preparer, if any, in the appropriate field of the electronic record of returns it originates. EROs may either transmit the return directly to the IRS or arrange with another provider to transmit the electronic return to the IRS. An authorized IRS e-file provider, including an ERO, may disclose tax return information to other providers for the purpose of preparing a tax return under Regulation 301.7216. For example, an ERO may pass on return information on an intermediate service provider or a transmitter for the purpose of having an electronic return formatted or transmitted to the IRS. Taxpayers authorize the ERO to enter their PINs in the electronic return record by completing the appropriate IRS e-file signature authorization form. This is Form 8879 for the IRS, e-file signature authorization. That authorizes an ERO to enter PINs on individual income tax returns, and Form 8878, e-file authorization for application of extension of time to file, authorizes an ERO to enter their PIN on Forms 4868, 2688, which is the application for additional extension of time to file U.S. individual income tax return, and 2350, application for extension of time to file U.S. income tax return. An electronically filed return is not considered filed until the electronic portion of the tax return has been acknowledged by the IRS as accepted for processing and a signature for the return has been received. So very important to track your returns showing when it was transmitted to the IRS and then waiting and receiving the acknowledgement that they've received it. However, if the electronic portion of a composite return is successfully transmitted on or shortly before the due date and the provider complies with the requirements for signing the return will be considered timely filed. One question we have is for those who have a balance due, the tax return may be transmitted, say, March 10th. But if there's a balance due, they actually still have till April 15th to pay the balance. They don't have to pay it just because they filed it electronically on March 15th. You can actually wait and pay for it as long as it's paid postmarked by April 15th. The IRS electronically acknowledges the receipt of all transmissions. Returns in each transmission are either accepted or rejected for specific reasons. Accepted returns meet the processing criteria and are considered filed as soon as the return is signed electronically or through the receipt by the IRS of a paper signature. Rejected returns fail to meet processing criteria and are considered not filed. Very important to look every day back and check on any possible rejected returns. The acknowledgement identifies the source of the problem using a system of error reject codes and form field numbers, sequence numbers. The error reject codes tell why the return was rejected, and the form field numbers tell which fields of the electronic return data are involved. Publication 1345A, Filing Season Supplement for Authorized IRS e-file providers, is issued annually and contains information to help identify the cause of the reject. Most of the time, you open the return after the reject and click on the reject dialog box and it will take you to the information that they're saying is not correct. Most of the time, it's something simple. Name or Social Security number don't match ID records. So very important if that happens then to contact your client as soon as possible to get them to verify, resubmit the new information, you update and transmit again. If the IRS rejects the electronic portion of a taxpayer's individual income tax return for processing and the reason for the rejection cannot be rectified, the ERO must take reasonable steps to inform the taxpayer of the rejection within 24 hours. When the ERO advises the taxpayer that the return is not filed, the ERO must provide the taxpayer with the reject code accompanied by an explanation. The toughest is when, of course, the reason is someone else has already claimed their dependents as their own. And that usually comes as a surprise and results in anger on the part of your client. And that's where you can then explain the best thing is to give them their options. Well, you can let them get away with it, do nothing, and the return will be adjusted correct by the IRS, and you will either pay or get a refund based on not claiming those dependents. Or you can mail in. It can't be resubmitted electronically, but you can mail it in and then go through a very tedious process, but in the end, whoever has the right to claim them is the one that will get that refund. It just takes a whole lot longer. Bank products. Now, when taxpayers are entitled to refunds, providers should inform them that they have several options. An individual income tax refund may be applied to next year's estimated tax, or received as a direct deposit or paper check, or be split so that a portion is applied to next year's estimated tax and the rest received as a direct deposit or paper check. Now, electronic refund check or refund acceptance check. This is where a refund comes when the bank gets paid. So the tax return is transmitted through a bank. One of the advantages for the clients is no money's up front to pay for tax preparation. And then it's electronically transmitted to the IRS, and the bank receives a notice from the IRS of accepted. As they receive the notice of accepted, they then will submit and provide a check to the tax office. We contact the tax preparer and they come and pick up the check. And that's usually 1 to 2 days. There you go, 10 to 17 days or sooner. There is extra fees relating to doing that, and generally the only reason is for the tax preparer not to have to pay up front. And the refund comes when the bank gets paid. Now, it used to be a rapid refund. We used to have 1 to 2 day rapid refunds. That was actually a bank loan. Those are no longer available. Banks have gotten out of the process of that, and I've seen nothing at this point to show a 1 to 2 day rapid refund. About the most rapid possible is a 1 to 2 week. Well, if the IRS accepts the return, it can take the same amount of time today utilizing electronic filing and direct deposit of a refund. So the time difference is not that much anymore. The primary reason to continue with the bank product is if someone just doesn't have the money up front to pay for tax preparation. Now, direct deposit in whichever way is obviously money going directly into a taxpayer's account. You need care to make sure that you have the correct bank information, and it will come directly from the IRS, so there is no additional bank fees. This year especially, as I would show and tell them the options of take the fees out of the refund, go through a bank, or direct from the IRS and pay me right now the tax prep fees. Many cases they would choose that option because they would save some money. Now, taxpayers who owe additional tax must pay their balances due by the original due date of the return or be subject to interest and penalties. An extension of time to file may be filed electronically by the original return due date, but again, it's an extension of time to file, not an extension of time to pay a balance due. There is no extension of balance due without any interest or penalties. Providers should inform taxpayers of their obligations and options for paying balances due. Taxpayers have several choices when paying any taxes owed on their returns, as well as estimated tax payments. Credit or debit card payments. Taxpayers may also pay electronically using a credit or debit card. Taxpayers can make credit or debit card payments when e-filing or separately via telephone or the internet, but there usually is an additional fee. Well, that completes Chapter 20. Be sure to go online to complete the review questions and the TPAs. Matter of fact, there is no TPA for Chapter 20. And be sure to start studying for the final. Thank you.